This is Marek Fuchs here today to talk to you about what happened with healthcare stocks and the stock market at large last week, and more importantly, puzzle out what might be happening in the coming week. Now, last week was a bad week with a touch of bad. The market had its foot caught in the door again of Europe, which wasn't good. Moreover, the deadlocked election is unsettling for the market, which likes nothing more than security, than serenity. As we spoke about last week, the market doesn't care whether a Republican wins or a Democratic wins. It just wants to know who's going to win, and it doesn't here. Also, obviously, last week was the start of earnings season, and that brought forth disappointment from start to finish. We had bookends in the form of Alcoa on Monday and JP Morgan on Friday. And in both cases, well, at first, traders were heartened by what they saw, but in the final estimation, they were disappointed. In the case of Alcoa, the earnings were okay, but they said disappointing things about the future. In the case of JP Morgan, their earnings looked okay, but there were a lot of one-time credits there, which means you can't tell anything long-term about JP Morgan or, by extension, any financial companies for those as a result of those earnings. So it was the worst week in about 4 months. The Dow and the S&P were down about 2% each, and the Nasdaq less, but still down. Now here's the deal. Consumer confidence came out, and that was kind of passable. But it was earnings that held sway last week, and earnings that will hold sway in the coming week. In terms of healthcare stocks, well, Pfizer said late trials of its pain medications show it to be as good as its rivals. Lilly's Alzheimer drug also did well in late-stage trials, and that caused some Wall Street firms to upgrade. Now, J&J, and this is really interesting, got a big red mark of a downgrade from Goldman Sachs. They issued a sell of J&J, which is a rarity, right? Wall Street recommendations, it's like all of our kids. They're all geniuses. Wall Street covers firms, and they mostly have them buys. Occasionally, if they don't like them, holds. This was a sell. But there is a caveat the size of Bolivia. And here it is. While Goldman called J&J a sell, it set a price target at 72. This is significant because J&J has been trading in the mid to high 60s. So the price target for this sell was above where the stock is trading. So if you hold on to the stock, you'll actually make money when you're supposed to sell it. What's going on here? Well, what's going on is the typical Wall Street do-si-do, where a Wall Street firm tries to have it both ways. They call for a sell on J&J. That way, if it goes down, they could say, hey, look, we said it was going down. But they have a higher price target. So if it goes up, they could say, hey, look, we had a higher price target. They win in either case, but you'll lose if you listen to this sort of nonsense. So ignore this big J&J Wall Street analyst report, and that's really important because J&J reports this week, and you don't want to get too clouded by it. Also, let's mention Glaxo, which announced that they're going to open up their clinical trials to more inspection and discussion, which is really good. Traders do not like silence. They do not like companies that play information close to the vest, as Glaxo very obviously and very controversially was. So this is a good development there. Now, this week, what do we have? Well, we have the debate on Tuesday. More reminder, as if we need it, that this is going to be a tight race. That's no good. But here's the big story of the week. It's earnings. Last week started earnings season. This week we're going to have 40% of Dow companies reported. 40%. That includes IBM, that includes Intel, and that includes J&J. Now, J&J's earnings are expected to come in at about $1.21 a share. That's down about 0.2%, and earnings of about $17 billion, which is up about 6%. But if there's just a slight surprise in any of their divisions, the stock should run. It has a 3.6% dividend. There's uncertainty, some of it unfounded, coming out of this Goldman report, this strange Goldman report. So look for some action with the stock if they could just beat even by a toe. Also, Intuitive Surgical, reports. Look for any sign of life in either their expansion into Japan or use in hearts to push that stock. Now, in terms of numbers, we have housing numbers, existing home sales coming on Friday. Don't pay too much attention to that, only because there are a whole bunch of different housing numbers, as we've seen, and they tend to say contradictory things. So you can't derive too much meaning from any single number. Look, if you disagree with me on any of this, and you won't, but if you happen to, feel free to tweet me. My Twitter handle is down below this video. Also, feel free to tweet me any and all questions. Most of all, have a happy, healthy, and profitable week, and we'll talk next week.